Hi traders, it's Chris. Hope you are having a wonderful Wednesday. It's the 12th of June. This is not a full market update because we are waiting for the CPI and the FOMC decision tonight. So I thought while markets are quiet, just do a quick coaching session. We're going to be talking about convergence, divergence, continuation patterns, wave fours, wave fives. And before I do that, I just want to update you on gold because this is not a update as such to say what's going to happen next, but because we don't expect much to happen before tonight at 7 p.m. Even when the CPI data comes out, there's going to be a lot of spiking, so look out for that. However, the markets will settle down and then go sideways and then wait for the FOMC decision, which I think is going to be more important. And as I mentioned yesterday, there's likely to be a cut, even though most forecasters are expecting to remain the same. If there's a cut, there's going to be a big reaction in the stock market, so look out for that. Okay, so gold. One of the things to look out for on the left is liquidity zones. This yellow zone is a liquidity zone, i.e. the sellers are waiting to grab the move, and then you have a liquidity zone in the blue zone, which are where the buyers are getting ready. So just an update. So most of you have got the gold software by now, so you know how it works. However, what I've done, I've matched this on the 5-minute chart. See this here? I've just drawn a rectangle to match the numbers here so that it comes in exactly the same price. And as you can see, what tends to happen is once you get a breakdown, it comes back up into liquidity and sells off. So you can actually get into that quite early. And have a stop just above that, a 20 pip stop or whatever it is. Now, of course, we're not seeing much going on, so that's just a little tip there. The other thing to mention is continuation patterns. Look out for these because they are highly significant. So whenever we see the price move down, it moves up again like a 1, 2, 3 pattern. But the important thing is to recognize is a continuation pattern. That's in the wrong color. So that continuation pattern is a good selling signal as well. So if you are here, then of course you can see that there's an engulfing candle as well. So it's selling off and the price should continue to your target, whatever your target might be. So just a little tip there. Let's go into the price action charts. So the price action charts are available. If you don't have the price action charts, then click on the links below and we'll get you set up to get you trading highly successfully. So we're talking about convergence, we're talking about divergence, and then we're talking about entry points just to help you along. So this is the Canadian Swiss. I will give you a few other examples as well. Again, prices are not going anywhere, but that's to be expected. Everyone's waiting for the data. However, we can see, first of all, let's deal with this first, we can see that the price is moving into a convergence area. We can see the long-term trend. Yes, I would prefer to see the price coming up into this area here and bouncing off this trend line to go down, and it probably will do that. That's why we've got our stop above here. So this is a liquidity zone. The yellow zone here is supply, automatically drawn on your chart. You should have these. If you don't, let me know. So this is converging into an area of high interest, plus the convergence is there's hidden divergence. So we can see that the price is achieving lower highs, yet the oscillator is achieving higher highs. So this indicates that it's quite possible that the price is going to continue that downtrend. You would have a target here, for instance, 64.09. So would be a nice, you'd have a nice stop as well. It wouldn't be much stop, maybe a 20, 30 pip stop. I did send a signal, so if you've got that signal in the Forex signal group, I do give an explanation on the signals because we're a coaching site. We're not a signals site as such. The signals that we do send give an explanation as to why a price is likely to do what it's going to do. And in this instance, we do expect the price to fall. Now, if we go closer to the market in terms of price action, we can see that there's bits of demand, but I'm not worried about that. And as you can see, we are in profit. And the other thing to bear in mind, most of you have got the price action charts by now. You can take these off. So we would have a target down here, or even below that. So the idea of the price action charts is to tell you where the price is going rather than where the price has been, and that's really important. So from the long-term point of view, we can see it's in a long-term downtrend. That's the way you want to be. That's the direction you need. And then, of course, we have convergence on the higher time frame as well. The other thing to point out on the lower time frame is that we do have negative divergence. Let's take it back to black, and you can see that quite clearly there. And then the break and the entry for me is the breakdown of this area. Let me just draw a line there. So there's the change of character there. And please note that the price has also fallen below the 20 SMA. And that's really, really important. You can monitor this, not monitor it, but you can manage this. This is going to probably take 3 days to get to target because it's a slow miner. So what you can do, as the price falls, heading for target, you can use the mauve line, the 20 SMA, to move your stop. Here's another good example. Again, we're not seeing price action in any form or any parabolic trends to talk about. However, what we can talk about in the meantime is convergence into areas. So once you've got the price action charts, you can actually make your own mind up. Let's change that color. Go blue. So once it comes into convergence, like we saw earlier on the New Zealand Swiss, we can say that the price has now reached a level where it's achieving lower highs into liquidity, into the trend line on the trend channel, and so the price is highly likely to give way at some stage. Now the blue areas, and we also have a bit of divergence there as well. Let's go down to the lower time frame just to give you an example of that. So here's a 30-minute chart. So let me go rewind. So here we are. So there we go. So what we're looking for to get the entry, now this is middle of the night. I mean, it's not gonna, this one's middle of the night. However, it can happen anytime. London Open or New York Open is the best, 8 AM or 2 PM, something like that, where the volumes increase. And as you can see, as the point it comes into liquidity, that's an immediate sell with an engulfing candle as well. That's a great combination. And then you have the breakdown, you have change of character to the downside, and the price moves below the mauve line, the 20 SMA. The other thing to note here as well on the lower time frame, you have divergence. Not quite as clear on the chart, but nonetheless there is divergence there. You can see this here. And the price continues to go down. Now in this instance here, where we see the price moving up, down into high demand and liquidity zone, that combination there, against the trend, but it's still enough information because in addition to that, we have positive divergence on the 30-minute chart. So in those instances, you have convergence, i.e. hitting a trend line, albeit down, and liquidity. So you're likely to see a bounce. The other thing to point out at this stage is you can see a doji here, reversal bar, and then a bullish momentum bar. So that's a reversal sign. So combined with divergence, convergence, and then change of character, price goes up, and the price goes up, and the price goes up, the price goes up. So, of course, it's not going up anywhere at the moment, but you can see the point here. If you want 65.89, you know, that's 30 pips. Neither here nor there, you'd be aiming up here ordinarily because that's the way it would go. But just wait for the price to move and stay above the 20 SMA is usually enough for any kind of entry, and you'd have a very nice stop there, 20 pip stop. Now let's talk about the Euro Swiss, where we had a recent successful trade. I've closed mine now, but it's come down close to the target, so we do expect the price to come down its target, but with things quiet, I've banked my money anyway. Unusual for me, I usually let it go, but I got a bit bored with it, to be honest. But one of the things I want to talk about here is a continuation phase when it is continuing this trend here. So what I put on here is what we call the stepping stone effect for price action, and it's really helpful in once the price has been established. So once you've got the breakdown, then you have many opportunities to get in, or you just simply hold it to target, that's fine. However, during this phase and during this move, there is a stepping stone effect, and you can see that visibly here on this particular chart. One thing to note with these green pivots, as they're known, they do have opportunities within them. So whenever the pivots are narrow, then that indicates that the price is going to have there's going to be a lot of volatility in the market, and therefore it's likely to continue that downtrend into a big move. Once they're wider, it tends to be a quiet day. Just a bit of guidance there for people who've got the price action charts. The other thing to note here is the pivot, the black line here, stepping stone effect, stepping stone effect, stepping stone effect, etc. And what tends to happen here on the lower time frame I'll go into in a minute, the price comes into this area and there's a trading opportunity throughout this trend. So it has to be trending, it has to be clear. If you're looking for a fresh break on the price action charts, then it won't be clear. You don't need these tools, as explained earlier. They're looking for a wave 5 or a wave 4 continuation pattern. So let's go down to the 30-minute chart on the price action charts and let's see what that looks like. So I've added the tools that give us the information when a trend is established. And one of the things to note, of course, is that the price breaks. Once the price breaks, then there's another pullback up into this area, into liquidity, into the same pivot points. Let me highlight these for you. So there's the pivot points as mentioned in the higher time frame. Pivot point, pivot point, pivot point, and there's the breakdown. So once you get the breakdown on these charts, they are a fantastic way of getting in. Just trade the breakdown and then put your stop above here, above resistance, another opportunity there. And the other thing you can do, of course, is look for any hidden divergence. I'm looking for some. So let's see. Yep. So let's draw some lines. So we can say that here to here is higher highs on the oscillator and lower highs on the oscillator here. So the price is likely to capitulate and start to move back down into the trend and start to move down. The other thing you can do, which is really useful, is wait for the swing high. So a swing high is typically when the stochastic is overbought and the CCI is overbought at the same time as hitting a liquidity zone and a pivot point. So they're really important. The other thing to bear in mind is a continuation pattern is emerging, and you can say that this price is, this stochastic is achieving lower highs, and so is the price itself. So that indicates that you've got continuation patterns into the downtrend in this instance, with a price which is very high indeed. So you're buying very, very high in price, and the price is going to continue downwards. And as you can see, the price did. Another opportunity here So this is the value of the price action charts. Once you've got them, you can scan the markets very quickly and see where the opportunities are in terms of a trend or a wave 4 or wave 5 breakdown or continuation. Again here, now this is a good one. This is even better because the price has confirmed it's been overbought, continued up, and that creates negative divergence. So the price is moving up, yet the stochastic is achieving lower highs. So again, powerful stuff, and the price moved down. So a fantastic way to trade using the price action charts. If you've got them, this is a great tool, and if you haven't got them, then it's a great tool because it's very appealing, and you can see where the entries are. I'm not on my charts all day. It's not my thing. I prefer to play golf and spend time with my family. That's the reason why I developed this. I make money in my markets, but I don't look at them all day. When I see a signal, I will let you know, and I will give you the numbers in the Forex signal group. So if you enjoy this video, give me a like, and if you've got any questions, just put some questions into the comments box in YouTube or on Telegram, and I'm happy to help you along the way. The other thing to look out for is divergence, positive and negative, so that you can make better decisions. When you see this tool, by the way, just draws a line for you. You haven't got to do anything in terms of divergence. If you don't have the tool, don't worry, just use the CCI. It's just as good. But all it means is the momentum in the market is coming out. Okay, and so there's likely to be a retracement at the very least. Not necessarily a reversal, because you need more information. But here, divergence, price is going to correct. But actually, if you've got in here, you stop up there, it doesn't matter, because you're going to reach your target anyway. So hopefully you found that a useful guide to price action, convergence, divergence, continuation patterns, wave 4 and wave 5. Any questions? Come back to me.